Hi guys, if you want to improve your investment results, keep watching. You pay commissions when you buy and sell stocks, and then you deal with income taxes. Depending on your broker and the country you are investing from, these costs can vary. From my experience living in various countries, I can tell you that the price of a SWIFT transfer on average is between $20 and $30. While this may seem relatively inexpensive, there is a significant difference in profits between investors who actively try to minimize these expenses. You might be wondering, what can be done if some of these costs are unavoidable? Well, there are ways to reduce them, because every dollar you save becomes a worker that can generate returns throughout your life and even for future generations. If you are consistently funding your account, let's say every month, and you want to avoid unnecessary expenses, consider the following strategies. Change the bank you use for deposits, as it might offer more attractive conditions. Link your bank account with your broker's account, allowing for free transfers between them. Register with Wise Transfer. Based on my experience, I can say that Wise can compete with banks located outside the United States, and it also provides an option to link your bank account with a Wise account to avoid hefty fees. Adjust your financial strategy. Let's say you invest every month. This means that you pay $360 annually for SWIFT transfers. If you still want to invest every month, then you can do the following. If you save the money that you want to invest every month, but replenish it once a quarter, you will reduce the expenses by 3 times. If you normally invest $500 every month, instead, consider investing $1,500 once every quarter. Then manage your finances to allocate $500 every month from your brokerage account. This way, you can save on transfer fees. Now, if you have the opportunity to make an annual deposit, let's say $6,000 for the entire year, you will only pay $30 in transfer fees instead of $360. Can you feel the significant difference this can make in your savings? Now, let's assume you are a successful investor who can compete with the S&P 500 index with an annual profit of 15%, close to Warren Buffett's performance. Under normal conditions, if you invested $6,000 with a 15% profit, your investments would grow to $6,900. However, let's now consider the impact of fees and taxes. If you add $360 for fees and $40 for buying and selling operations, your total investments would amount to $5,600. After a year, it would grow to $6,440. Now, let's assume that there's a 20% tax in your country. In this case, after paying taxes, you would be left with $6,300. So here's the difference. Under normal conditions, your investments would have grown to $6,900, but due to the fees and taxes, you would receive only $6,300. Can you see how these expenses and taxes significantly affect your profit? Even if you were as successful as Warren Buffett with a 15% profit, your profit after all these expenses and taxes would be reduced to 5%. Now, imagine the difference between investors who avoid these fees and invest in the S&P 500 index over 10 years. If you liked the video, don't forget to subscribe to my channel.